Disclaimer, everything in this video is just my opinion and I could very well be completely wrong. Listen and watch at your own risk and never take anything I say as financial advice because I'm just a guy on YouTube and not a financial advisor. Thank you. Enjoy. Hey traders, no need for any kind of intro in this video. The title says it all. Today I'm going to be showing you how to place orders and place stop losses inside of the Coinbase Pro platform. And the reason this is important is because you always want to be using risk management in some way. A stop loss is one of the main ways I use risk management. So let's go ahead and dive into the Coinbase Pro platform. Before we do, I'm entering a trade here on MANA. I'm going to enter it live with you here so that you can see how I actually place the trade and place the stop loss. But do not go place this trade. This trade's based on a strategy that plays out over time, and I have no idea if this trade's going to win or lose. No clue whatsoever. It gives me an advantage over long periods of time, over a lot of trades, not on this one trade. But with that said, the disclaimer out of the way, let's go ahead and go over to the Coinbase Pro platform. Again, I want to enter MANA right here around the $2.87 mark. So if that was the case, I would come over here to Coinbase Pro. Obviously, the first step is to make a Coinbase Pro platform. After you've done this, this is what you will see. You would go here to select the market you want to trade. You would just type in MANA. I'm trading MANA versus USD. And in this case, whenever you want to decide the size of your trade, let's actually do an example. Let's say the example is you want to risk on this trade 2% of your account, and let's say you have a $10,000 account. So let's go ahead and type that out just to make it very easy to remember. You have a $10,000 account. You want to risk 2%, just as a very simple example, which means you are going to risk $200. Okay? If that was the case, the first step in deciding how much of this you need to buy in order to risk that 2% is to take a look at your stop loss after knowing your account size and your risk, obviously. Now we take a look at your stop loss. Your stop loss is 92 cents. So what you need to do, the quick and easy math here, is we need to take our $200 risk that we have or that we want in this trade, and we need to divide that by 0.92, which was our stop loss, right? Here we get 217. What this means is we're going to need 217 MANA versus USD, 217 of these coins in order to equal our $200 stop loss. But if we go back over to Coinbase Pro, there's no way we can type in what we want in the coin itself. We have to type it in our currency. For me, it's USD. So since I have to type this in for USD, I have to do a little more math now. So just bring up your calculator, super simple math here. If we need to have 217 of these coins, then all we really need is to multiply this by the current price of the coin when we're going to buy it. Right now, that's $2.87. So this multiplied by 2.87 will give me the amount of this coin I need to purchase in dollars. So if you have, let's go back over to TradingView, a $10,000 account, just to give you guys how you would calculate your position size and manage a stop loss depending on what percent of your account you want to risk. Let's say you have a $10,000 account, you want to risk 2%. That is a $200 risk of your account. In order to reach that $200 risk, you need to purchase, and that $200 risk, in case this is unclear, is your stop loss size. What I mean by that is right here, if price continues lower and hits your stop loss, we want that to be equal to $200. So if that's the case, what we need to do for that to be the case is you need to purchase, or you would need to purchase $623 worth of this coin in order for that stop loss to be equal to $200. So you would come over here if you wanted to actually place this as an order. You would go to your Coinbase Pro platform and you would just type in that exact number. I think it was 623. We'll bring it up. Yep. You would just type in 623. Now that is your actual position size. We're going to talk about how to calculate your stop loss later on. I'm actually going to go ahead and place the trade. My account size is a bit larger than that. I have 35,000. I want to multiply that by my risk, which is going to be 2%, 0.02, which gives me $700. So if I'm risking $700, now what's the rest of the math I have to do? Well, first thing I have to do, my stop loss was what? 92 cents. Remember, I'm not going to go back and forth on the charts. I remember it. My stop loss was 92 cents. So now I have to multiply 700 times 0.92, which is going to give me the amount of coins I need to buy, which is 644. Now I multiply the amount of coins times the price of the coin. So the amount of coins times $2.87 gives me the amount in dollars that I need to purchase of this. So the reason I did this is so I can type it in over here, because Coinbase Pro doesn't give you an option of saying the amount of coins. You have to type in the amount of your currency you want to purchase of that coin. So in this case, I need to buy 1,848 MANA for my stop loss that we had over on TradingView, for my stop loss of 92 cents to equal $700, which is 2% of my total account value. I know that's a lot of numbers and a lot of math, but if you didn't understand it, go back and rewatch this part of the video. I promise you'll get it after watching it twice. So I'm going to go ahead and buy 1,848 MANA. There we go. Now that we have bought that, we need to set up an order for that stop loss. So how do we do that? Well, you're going to go over here to your order form. You're going to click sell, and you're going to click stop. This is the confusing part on Coinbase Pro versus stop losses in any other brokerage that I've seen, is that they have two places you have to put in a price, which are your stop price and your limit price. And I'm going to explain what that is right now. So for your stop price, what I always do is I put in my exact stop price in the stop price section, which is 1.99. I don't worry about the rest of the numbers. Right now you can see right here on this little red, this is my stop loss price. It's 1.99. $1.99 is where I want to get out. If I'm wrong, I don't believe that we're gonna continue higher. If price gets down here, we could be on a roller coaster to the downside. So I don't want to be in anymore. I want to exit and take all risk off the table at $1.99 on this coin, which is going to equal a $700 loss, or a 2% loss in my account. With that being the case, I set my stop price over here on Coinbase to $1.99. Now, after I do this, I have some more work to do. After setting that to $1.99, I obviously want to get rid of the whole position there because I want all risk off the table. So I just hit max, which is 640 MANA. And I don't know why it does this. It actually puts the amount of coins you have for your stop price, but when you're buying, it doesn't show you the amount of coins. It shows you the amount of money in USD that you're investing into that coin. It's really weird. But anyway, I found out how to do it after a little bit of time. What you always want to remember on a buy trade, at least, what's happening here, maybe it's easier to explain it like this. This stop price is when Coinbase Pro will start looking for people to fill your order. If you don't understand that, any time that you need an order to be hit, if you're trying to sell, which is what we're doing, a sell stop, if you're trying to sell, someone has to be there to buy for you to be able to sell. Otherwise, it's going to keep going down. That's just part of trading that happens in cryptocurrency and Forex and stocks. There always has to be someone there to fill your order. So with that being the case, what it's going to do is start looking at 1.99 for somebody to fill that order. What I always do for buy trades is instead of 1.99, I'm going to go 1.989. 1 decimal below my actual stop price. What that means, Coinbase is saying, I'll start looking for people to fill your order at 1.99. If there's people to fill your order there, I will actually fill your order at 1.989, which is literally the same number essentially, minus a decimal point. So this is how you would set up a stop loss. Always just remember, if you're doing a buy trade and a sell stop, your limit price has to be lower than your stop price. So again, my stop price on TradingView, you can see it, it's at 1.99. My stop loss needs to be set up with 1.99 as my stop price, and a number lower than that, always do 1 decimal point lower, like 1.989 as the limit price. The limit price is where it actually fills. The stop price is when Coinbase Pro will start looking for people to fill your order. So with this all in here, and again, if any of that was confusing, I promise watch it a couple of times, it'll all come together. But with this being the case, I can go ahead now and place my stop order as well. It's going to tell you that there has to be people there to execute your order, which we already know. So just click place order. And at this point, I have my order placed. I've already purchased MANA, and I have my stop loss placed and ready to go. And once you reload the page, you'll see that your fills are already filled here. You've already been filled your orders, plus you'll have a open order here for your stop loss. And that's exactly what we have here on MANA. Now let's head back over to the MANA chart and talk a little bit about risk management and the reason we want to use a stop loss in any trade that we are in outside of long-term investing. Now, if that's the case, I think that a lot of beginners in trading don't understand that there's a difference between long-term investing and just simply trading, like day trading or swing trading. The reason I say that is because every crypto video I do, I have people say, no, you have to buy and hold. Buying and holding is an investment, a long-term investment strategy. It is not a swing or day trading strategy. This is a swing trading strategy. Neither one is better or worse, and either one can work. I have a long-term investment account that I do buy and hold cryptocurrencies on. I put a certain amount into a few different cryptocurrencies every single week. Every single week that passes, and I've been doing it for about 8 months now. Every single week that passes, I have $2,000 that I put into a long-term investment account for cryptocurrencies. So I have one of those, and I get it. That is a good strategy if you want to invest in cryptocurrency. But investing and swing and day trading are completely different things. For swing and day trading, you need to always have a stop loss and a certain amount of risk that you're willing to give in case you're wrong to the market. Because there are going to be instances when you're wrong, you don't want to get married to the trade. Before you place a trade, you want to ensure that you have a place that you're getting out that makes sense, right? In my case, I have a stop loss down here because if price comes down and starts to make moves below the 50-period moving average, starts to break my previous low over here, then I don't want to be in the trade anymore. It's not giving me any indication that we're going to see new highs. Whereas currently, we have an indication that we could see new highs. We've had a massive move to the upside, about a 50% retracement, and we're starting to see a new low that could in fact be a higher low, and this would be something like I would expect price to do if I'm right. Again, I have no idea what this trade is going to do. Do not go place this trade. I have a certain strategy that I trade over and over and over and over. I have hundreds of trades a year using this strategy, and my edge that I have with this strategy works out over that long period of time. None of us know what one trade's going to do, so I have no idea, yet again, I'm saying this again, if this trade will win or lose. I'm actually thinking of waiting and releasing this video in a few days because I'm so scared I'm going to post this video and then a bunch of people are going to go buy this when you absolutely should not. You don't know the strategy I'm using. Therefore, you can't continuously trade it over 100 trades. Therefore, you don't have an advantage by just placing this one trade. Before we continue here talking about risk management, I've considered releasing something where I'm sending a video to members of what's called the Crypto Report. And I'm sending this video out 1 to 2 times per week, depending on the opportunities I see in the crypto market. I didn't get that big of a reaction, or not as big as I expected from the last video I did and announce this. So if that's something you think you would want to be a part of, then go ahead and go to the link on the screen. And there's also a link in the description where you can sign up to be alerted if I do end up coming out with the Crypto Report. Again, I didn't get the reaction I expected from the last video, so it may never happen, but if I have enough interest in this, then it's a program I will be releasing soon. With that said, let's talk a little bit more about risk management. On an investment side in crypto, long-term investment, because I know some of you, again, I've had comments, some of you are actually looking at crypto as more of a long-term investment. If that's the case, this isn't the strategy you need to be using. This is the strategy I use for long-term investing in the crypto market. First is understand your risk management plan. Risk management is the process of identifying the risk of a certain investment, analyzing that risk, and then deciding if that risk needs to be mitigated or if you accept that risk. So right now, if you invest your life savings into crypto, then you would be that no one can tell you what to do, right? Risk management, so personal. But if you're someone who's decided I'm going to invest my life savings into crypto, then you need to have identified the risk, which is everything could go to shit in any market, but study and identify the risk of you investing your life savings there. Then you need to analyze that risk and decide, should you mitigate it, only invest half my life savings, or less, or should you accept it? If you accept it, awesome, keep moving forward, keep investing, do whatever you want to do with your money. This is not financial advice. I'm just trying to explain the differences between risk management in long-term investing and risk management in trading. Risk management in trading, what we have to do is not only analyze our risk capital, is what that's called. How much am I willing to put into an account and possibly lose from speculative trading in a particular market, in this case, cryptocurrency. So what we have to decide as when we're trading in these markets and not just as investors is first, what is our risk capital? What's an amount of money I can afford to lose that I'm willing to risk in speculative trading? After that, you have to decide what is going to be your risk per trade. How much of that overall capital am I willing to put forth as risk on every single time I take a chance like this? What we have in crypto is educated guesses based on either what we read about a coin, what we have heard about through social media, or what the next thing Elon Musk is going to say, or technical analysis. In my case, it's all technical analysis based. So I analyze the risk based on technical strategies, and I decide how much of my total account value am I willing to risk on a specific trade. And then we also have to decide what's our overall exposure, which is the amount of risk you have in place at any one given time. Let's say I have 2% risk per trade, and I want to keep my maximum exposure, the overall risk I have, down to 10%. Then I'm only going to be able to be in 4 trades at any one given time because that's already at 8% maximum exposure. So those are all the different things we have to think about when swing and day trading in terms of risk management. And in terms of long-term investing, it's completely up to you how much of your total capital, your total net worth that you have, that you're willing to put into this based on what you see cryptocurrency risk-wise, opportunity-wise, and based on your own personal risk tolerance. Do you accept that risk, or does it scare the ever-living shit out of you every time cryptocurrency takes a dip? Those are things you do have to consider anytime you're trading. But with that said, this video got a lot longer than I needed it to, but I did want to explain risk management and also explain how to set a stop loss that matters in crypto, a stop loss and the math behind how you get that stop loss to equal a certain percentage of your overall account value, because I know based on some of the videos I've done, a lot of you commented wanting that. So there you go. Now you have it. Hope you enjoyed it. If you did, click that like button. Go ahead and subscribe for more videos like this each and every week. Do not go place this trade. I'll know if you do, and I'll be upset. Don't go place this trade. If you are interested in getting some of my crypto analysis every single week, then go ahead and sign up at the link you can see on the screen and the link below. You don't have to do both, just pick one. And it's called the Crypto Report. It's where I will be sending you a video every week of the cryptocurrencies I'm paying attention to, the zones I'm paying attention to, and how I plan to trade those throughout the week. With that said, I'm gonna let you guys go, as this video, yet again, has gotten much longer than I wanted it to. Best of luck in your future trades. I'll talk to you in the next video. See y'all soon.